Deep Dive, exploring the investment opportunities in Pakistan.
On our 10th episode, we have a real treat for our audience. Our guest is Mr. Shahid Ali Habib, CEO of Arif Habib Limited, one of Pakistan's leading investment banks. In this position, he oversees all brokerage and investment banking activities, especially equity sales and marketing and placement of IPOs. Of special note, he was involved as domestic team lead in Government of Pakistan's divestment of Habib Bank Limited and United Bank Limited. He has also served in various PSX committees. In this discussion, we ask our guest to provide their 2021 forecasts across various economic measures, explain the sudden turnaround in the IPO market, comment on the recent digital initiatives to help onboard equity investors, and for fun, we hear his thoughts on SPACs and Bitcoin. Shahid is an authority in the capital market space, and this is one conversation you don't want to miss. Enjoy. Shahid, it's a real pleasure to have you on our show today.
Thank you so much.
Oh, yeah, absolutely. And what I'll just say is I have structured our conversation in three parts essentially, so as to best leverage your expertise. And that would be across research, IPOs, and equity trading. So let's start with the research section first. And really within the research section, I'd like to hone in more on your firm's 2021 economic outlook on Pakistan. And I'll try this format more in a rapid fire way, or rather I'll throw some measurements your way and I'll ask you to respond with a 1 or 2 word answer on your projections. How does that sound?
Yeah, go ahead, no problem.
Okay, perfect. So let's start off with the first one. GDP growth in 2021 for Pakistan.
It will be around 1.85 to 1.9%.
Okay, perfect. That's more than what some of the mainstream media is saying. So that's a welcome answer. That's good to know. Exports in 2021 relative to a very strong 2020.
Our exports was around 24.8, $25 billion. So we don't see much growth because definitely we had 5% of decline for the last 5 months. So we think that it will be around break even.
Perfect. Flattish is decent. Pakistan rupee to United States dollar currency movement.
Yeah, I see 4 to 5% of devaluation by December 2021. So I see, currently it's 160. So I say around 160, 167 is fine, I guess.
Okay, excellent. Your forecast for interest rates in 2021.
Now, if you're talking about 2021 December or June.
Okay, let's do fiscal year, so June 2021.
So June 2021 is around the current discount rate is 7, so it's 7.5% max, I guess.
Okay, excellent. And do you have a different number for December 2021?
Yeah, I see little more upside for 21 because as the growth goes on, 50 basis point or 75 basis point more. So I can see you can take from today, you can take 1 to 1.25%. So 8 to 8.5, 8 to 8.25%.
Okay,
Yeah.
perfect. Here's an interesting one. Upcoming decision on the gray list as it relates to the FATF for Pakistan.
We will be out, inshallah. There's no doubt about it, because we already complied 21 out of 27 conditions that we will be out from the gray list. We will be in the white list by February.
Okay, perfect. Very bullish news. The KSE 100 ended the year 2020 at approximately 44,000 points. Where do you see it ending by December 2021?
I think that it will be around 52 to 54,000, 52,000, because, there is indeed, if you want just a number or you want a reason as well.
Oh, I'm going to come back to the reason,
Okay.
but
So you can say 52 to 54,000.
Okay, perfect. That's good.
If you want one number, or range is good.
Range is fine. I don't want to hold you to one number. Range is absolutely fine. And in fact, let me ask you, within the KSE 100, which sector or sectors do you anticipate having the best relative performance across the index?
Yeah, cyclical sector, I think, because cement and steel, autos, all these sectors will perform the best, I think.
Okay. And which sectors are you not very bullish on?
I'm not very bullish on banking sector.
Interesting. Is there a particular reason for that?
The earnings will not grow to the average earning growth of the index. So if we are expecting 17.5% to 18% of earning growth across the board, but we are not expecting any significant growth in the banking sector. Rather, we are expecting like 2 to 3% of earning growth. So I think it's not a good performance if the whole index is performing like 17.5% to 18%.
Okay, excellent. I'm going to circle back on the projections that you made and go back to the 52,000 approximate points that you set for KSE 100. Can you connect the two for us, some of the projections you made and how they may impact the KSE 100 to get to the 52,000 points?
Yeah, I think the most important thing is economic recovery. We have seen a very good economic recovery in 2000, in first quarter 2021, and then last quarter as well, second quarter 2021 fiscal year, and this quarter is also doing good. So we have seen LSM large scale manufacturing growth of 5%. We have 7.3% of large scale manufacturing growth for the 5 months. That's awesome. I mean, that's a high number, and I think this economic recovery has translated into corporate earnings growth as well. The first quarter 2021 earning growth was around 38%. So the first quarter was 38%. The second quarter we are also expecting a high growth number. So all the listed companies' earnings are booming these days, and we are comparing year on year. So we are, if the first quarter 2021 number is compared to first quarter 2020, in first quarter 2020 was not COVID. So we're comparing with that period where the COVID was not there. So even that 38% of earning growth, and that economic recovery is because of various measures by government and State Bank of Pakistan. There are construction sector incentives that government has given, and apart from that, State Bank has taken various measures. They have postponed the repayment for various businesses. They have also initiated State Bank Rozgar scheme. They have also initiated temporary economic refinance facility, which is called TERF, which is a fixed rate for 10 years, which is like 1 to 5% of fixed rate for 10 years, which is first of its kind. I mean, which has never happened in our history. So these kind of measures have actually boosted all the businessmen to take the risk to go for an expansion. I mean, I have met so many friends, so many businessmen who used to be very conservative, and who are not very much bullish on expansions. They are also doing an expansion because if they know that they can get fixed rate loan from 2 to 5%, so they can take that kind of risk, and they can go for an expansion. The only reason earlier was that the debt part is an uncertain part always. When you take the floater loan, you don't know about the discount rate. The discount rate sometimes is 7%, sometimes it's 13.25%. So this is the most important risk for all the businessmen. So if that uncertainty is over, that's the most important thing. So there is business expansion taking place. So economic recovery, and this business expansion is largely because of the large scale manufacturing, which has grown 7.3%, for the first 5 months. And it's primarily, cement, steel, auto, oil marketing companies. Everywhere we have seen growth. Food, consumer, everywhere we have seen the growth. So I think that this economic recovery will taper down to the corporate sector, and we have seen results, very fantastic result in the corporate sector that has actually translated our investors. And the most important thing, the second most important thing is liquidity. We have huge domestic liquidity now, because the fixed asset yields are very low, and fixed investment yields are like 7 to 8%. So this is so low that now the major institutions like mutual fund and insurance, they are actually they are transferring their unit holders funds from fixed income to equities. So I think they have got a huge size of assets under management. For example, in mutual fund we have around 800 billion rupees of assets under management, and out of that 25% is in equities and 75% is in debt. In insurance sector, we have around 3 to 400 billion rupees of assets under management, and same is the ratio. 25% is in equities and 75% is in debt. So I was just of the view that even if they convert 5% of their assets under management from debt to equities, that will give 50 to 60 billion rupees of amount to the equities market. That's a big thing for the market. So I see huge liquidities there. The third most important thing is the valuation, because the valuation is at the rock bottom. I mean, you have to compare with the price earning multiple rather than the index. Although, if we compare 2 years, earlier, a 46,000 index or 44,000 index, at that time, the price earning multiple was high. Today, the price earning multiple is low. We are at 7.4 times price earning multiple. Our average price earning multiple for the last 15, 20 years is around 8.5 times. So we are itself 1 times below our average price earning multiple, and we are at the growing time of our economy and the corporate sector. So the valuation is also very attractive. I'm also looking for an inflow in this year because we think that the funds will move from developed market to emerging market. And since Pakistan is part of the emerging market, we will also have some kind of foreign inflows this year. And we already have now very low foreign investment in Pakistan. As far as total foreign investment in the listed space is concerned, it's around $3 billion. And out of $3 billion, only $1.5 billion is minority foreign investment. The rest is strategic or sponsors foreign investment. So this $1.5 billion is just 10% of the entire free float. So it's very low. So I see that, now going forward, we can have some foreign investment also in this year.
Excellent. Thank you so much for that information. I like the way we started off with a quick fire sort of information. And then thank you for connecting all the dots for us and bringing it in context. So that helped. Let's switch gears here to the IPO space. And this is based on some basic research I did. You can correct me if I'm wrong. But over the last decade, I believe Pakistan or the Pakistan Stock Exchange has had 36 IPO deals. But then it tells me that approximately 50% of these deals have either been underwritten or co-underwritten by RF Habib Limited, your firm. And so that's quite an accomplishment for both you and your team. So congratulations on that front. And so I guess I'll ask you first thing, Shahid, just for the purposes of our audience, what is an IPO? And then specifically, how does a private company, what's the process for a private company to raise public capital in Pakistan?
Okay, IPO is if a private limited company or public unlisted company wants to raise money for their company, for their project, and if they want to sell their stock, so they come to the market and they raise money, and that process is called IPO. It's called initial public offering. So they raise money for their project, for their company, and they sell the stock. They give the stock to the minority shareholders or the public shareholders. The process is very good now. The process is not that stringent anymore, I would say, because now State Bank, SECP and PSX have actually modified the regulations quite a number of times in the last 5 years. So the process is that the company must have the audited financial statement. What are the utilization of the funds they want to raise, their shareholding. So there are two things: whether the sponsor is divesting or the company is needing the money. If the company is needing the money, the SECP and PSX wants the utility of that money. Okay, so they want the model, they want the financial model, they want the projections as well. They need some historical numbers as well. They need the audited financial statement, and they want that the audited financial statement should not be 8 months old. So it should be once the prospectus is published and once the prospectus is approved by stock exchange and then SECP, then you can publish the prospectus, and then you can go to the market to raise money from start, from making the prospectus to going to stock exchange, and then going to SECP, and then going to the investors and going for road shows. And then after the road shows, once you set the book building dates, you get all the bids, and then all this process takes around 3 to 4 months.
That's perfect. Thank you for providing that context. I'm just going to ask you very simply, what does a healthy IPO activity say about the overall market?
It's good for the company to raise money from investors. They become more accountable. If you compare the listed company's performance to unlisted companies' performance, it's always been the listed companies' performance is high. I mean, even the government institutions who are in the market, who are in the listed space, their performance has always been higher than the unlisted companies, because they have quarterly accounts. They have the board who meet regularly, quarterly, and they see the performance. They ask for the performance. The market also reflects the price. So if the price goes down, definitely it is more, the management is more accountable to that. So it's always being healthy that, if you go to the market, raise money and use that money for the project, for expansion, that's always been, the healthy for the company. And if you definitely, if you get the money at a better valuation, definitely that's how you can see the valuation of the company. You don't know about the valuation of the company if you are not listed. If you are unlisted, your valuation is the book value. If you go to the bank judge the company through the book value, not more than that. But when you go to the market, if the investors value you higher than the book value, let's say 1.2 times, or let's say 2 times or 3 times the book value, definitely that becomes the valuation. So the valuation is very important, for the health of the company as well, and for the shareholders as well. So I think, unfortunately, we have not witnessed much IPOs in Pakistani market. Maybe because of the we have some uncertain period during the last few years. We have not seen much stability, I think, and I think the sponsors have also been very reluctant to come to the market, and they assume that if anybody comes on their board, they see it negative. But now the impression is not that. Now there is some positivity about IPOs, and the new regulation of the SECP, which also allows company to get listed with 5% or 10% of the free float. It's very encouraging for all those companies who don't want to sell 25% or 30% of the companies.
Yeah, I'm glad you mentioned some of these points, and I think they make well for a discussion. I believe June 2020 was our fiscal year in Pakistan. If I go back 17 months from that date, I believe the Pakistan Stock Exchange had a grand total of 0 IPOs. Now, you've spoken to some of the reasons for that. You mentioned the instability, and I understand that. But then since June 2020, I believe the announcement was we're going to have close to 10 new IPO deals, and that's a record-breaking year if this actually materializes. And I'm going to very simply ask you, what caused the market to turn so quickly?
Well, because ultimately the valuation have raised now, and the market valuation have improved. The period you're talking about, the valuations were very low. We did the IPO of Interloop in March 2019, and after that, you are right. For 17 months there was no IPO, because after the Interloop IPO, the index came down from 47,000, I guess 47,000 to then 42,000, and then 27,000, and then there was uncertainty, there was volatility. So the valuations were very low, and nobody wants to sell their company at the rock bottom. If there is no liquidity, there is no volume. Volume is the key. Today the volume is double. I mean, even not double, more than double, because I saw the period in 2019 and 2000 and early 20. It was very low. I mean, it was 30, 35, $40 million average daily turnover.
Wow.
Today, it's over 150 or $125 million. So it's 4 times, 5 times. So the volume is the key. I mean, if you see more activity, more investors' interest in the market, and definitely there is appetite, there is availability of funds also, there is liquidity available in the market. And all these things go to the same thing. The interest rates are low, the funding availability for equities is there. So definitely everybody wants to come in the market, and if they see even 15% of earning growth, that's good for them, because the fixed rate investment is just 7% or 6%. So to answer your question, I mean, why there was no IPO? Because the valuations were low. First of all, the sponsors don't want to sell the stock at cheap. Number two, there was no volume. They also see that they also realize that even if they come to the market, there is not much appetite, because the interest rates were high. Even if the interest rates were 13.25%, 12%. So the required rate of return for equities is much higher. I mean, if 13% was the risk-free rate, so definitely you will ask 20-25% of return into the equities. So that was not possible at that time. So I think those were the reasons that companies didn't come. And the other thing also was there, because the companies were not going for expansion. There was some uncertainty, because the economy was not viable at that time, because they were not getting easy loans, they were not getting subsidized loans. So if you get a subsidized loan, then you also make a structure of equity as well. You come up with 60-40 or 70-30 equity and debt, so, or debt or equity. So you raise the money through debt, and then you go for an equity as well. So now the businesses are going for expansion. At that time, nobody was going for an expansion. Everybody was keeping their own businesses in house in order. They were focusing more on making their house in order. So that was the time. That's why they didn't come for an IPO.
And that makes sense. If the market is unstable, the index is really falling. Well, it fell from 42,000 down to 28,000 at one point. So clearly instability, and that makes sense. And now I can also see why the excitement is back, because we're seeing the index trend upwards. Let me
And
ask you.
as far as 10 IPOs you're concerned, we are already done 4 IPOs for this financial year. We are coming up with fifth IPO this month. So there will be 5 equity IPOs. Today and yesterday we had an Bank Al Bilad TFC IPO. So it's a debt IPO. That's also an IPO. So that's the 6th one. I mean, there will be 6 IPOs by the end of January.
Fantastic.
If you include one debt IPO as well.
That's excellent. Very bullish trends here for the economy, at least from a stock market standpoint. Let me move our conversation to innovations within the IPO space. We've had instances here in the US of direct listing. We've had companies like Palantir, Spotify, and Slack who've chosen this method to raise capital. And do you see direct listing gaining adoption in a place like Pakistan?
Well, there are direct listings in case of debt. There is nothing direct listing for equities, and stock exchange is working on that line, and we may see some new regulations of direct listing. We have one other listing. We have one other board that is called GEM, Growth Enterprise Market, which does not have which does not have the requirement of higher regulations, which has a minimum requirement of 25 million rupees of capital. So where you can find the investors before, and then you can come up, after the approval, you can just participate in the book building or in the fixed price. But you are right, there is no direct listing for the equities available as of now. I mean, the stock exchange is working on that line, and soon we will see some products where we can come up with direct listings as well. So direct listing is fine. I mean, it should be there because there are instances when we find private equity investors. We already have some investors available, and we want to see the valuation in the market as well. We want to see what other QIBs are valuing those companies as well. So here we get the opportunity for private equity investors as well, so they can exit if those companies get listed.
Okay, that makes sense. Uh, One criticism I hear from individuals who are looking to invest in the Pakistan Stock Exchange is we have a lot of traditional sectors, and these sectors have been there for the last 20 years. You mentioned cement and steel and autos. And the same sector, Shahid, if we had this interview 20 years ago, I'm sure those same sectors would have been coming up. And so the criticism I get is, why do we have a shortage of digitally native tech-based companies where the excitement is globally? And we have a startup space in Pakistan. It's beginning to thrive. And so I'm just going to ask you, why is there a shortage of these companies listed on the exchange?
Because ultimately the understanding of the investors is not there on that part. I would say that we were not being able to uh, to come up with those kind of investors. We were not being able to learn to take the risks, and definitely in digital the valuations are totally different. I mean, we have to value the company totally differently. We can't value the company through price to book or price to earning. Okay, so we have to value the company through number of users, how the growth is taking place, how the sales, how the revenues are taking place. So we have to measure the performance through proper valuation method, and that valuation method is not the basic valuation method. And unfortunately, market investors look at price earning multiple, price to book, uh, free cash flow model, these kind of things, and they don't rely those companies. The other thing, Altamash, is that we do not have we were not being able to have more companies by large sponsors in that sector. If the if the good sponsors, if the renowned sponsors come up with tech companies, definitely the investors will appreciate those companies because they know that they have performed well in other sectors. If they come up because they know the sponsor, they know their performance in, let's say, in cement sector or in steel sector or in auto sector, if they bring IT companies to the market, so investors will appreciate those companies. They will disregard the valuation method of IT companies by looking at the sponsor, so they can invest. But I found that the overall our sponsors, our big groups understanding of the IT is not much there, and they are not very risk, they are not risk taker on IT areas, and that's the reason, and that's why we are not able to actually grow our IT sector properly. Our IT export is very low, is around 1.2 to 1.3 billion dollars, which is nothing.
Well, it's interesting you mentioned that, because the same comment that you've made has come up with some of my previous guests who've mentioned the same thing, that there's a lack of conviction by the big sponsors in IT and the startup space. And I don't want to use a blanket statement, but I've heard those comments before. The buzz in the economy, at least in the North American economy, Shayad, has been SPACs, the special purpose acquisition companies. And I'm just going to ask you, for companies in Pakistan who are pre-revenue or early stage, so a lot of the IT startups come to mind. What do you think about SPACs being one way for them to enter the publicly listed markets?
I don't think that here you can find that kind of response from the investors because they will not be able to understand the companies properly. And the major investor in our market is mutual fund and insurance sector, and they get the money from their unit holders, and they have to pay the dividends. They have to they see the valuations on the daily basis, so they are very risk averse, Altamash. So they are the anchor investors in our market. The individual investors follow them. So they don't understand the financial model because they see that if these major mutual funds or insurance companies are buying, so that's a good stock. So we have to make up their mind. We have to educate them, I would say, that SPACs or IT companies are important, and these are the companies. So if there is one positive, case study, if there is one positive, issue takes place in that line, I think the others will come. So, but I didn't find anyone. Whatever companies we saw in Pakistan listed space, they all companies they came as the earning company. They came as that on the basis of price earning multiple. They didn't come on the basis of future projections. There is one company we did, which is TPL Tracker, which was a loss making company. Okay, so it was very difficult to place that, and we did that, and it was very difficult to bring investors, but alhamdulillah we did that. But it was a small issue. It was just 700-800 million rupees of issue, and we did that. But yes, you're right, understanding is not much.
But you know what? Your point here again, this actually proves your point because TPL Tracker is part of a much larger group. And so investors would have been able to see performances across those other groups and then take confidence from that to say, listen, I'm willing to take a risk here. Right? So
Yeah.
goes back to your original point. I'm going to shift to our last part of our discussion here, which is really on equities trading. We've had a flurry of equity trading accounts opened up by the overseas Pakistani contingent through the Roshan Digital account. I saw a tweet of yours recently that said close to 50% of these trading accounts opened up by overseas Pakistanis were opened up by Arif Habib Limited. So again, congratulations on that front. Clearly, your firm is an authority in this space as well. And just very simply put, I heard one of your YouTube interviews on this. Are there local or I should say, are there digital onboarding initiatives that are taking place that are targeted to the local investor as well, so as to increase investor participation in Pakistan?
Yeah, there are many positive developments on that. Thank you so much for asking these questions because SECP and PSX and National Clearing Company of Pakistan and State Bank on account of Roshan Digital account, they have done a tremendous job. First of all, let me talk about Roshan Digital account. That's a great breakthrough. I mean, I would say that's from this way we can have good inflows from our own Pakistanis, non-resident Pakistanis. We have received around $280 million of, funds from them, and this is totally repatriable. So they have, come up with this excellent idea, excellent initiative, and through Roshan Digital account, most of the money is going to Naya Pakistan certificate. Most of the money is heading to fixed income, but since they are doing interest rate arbitrage, like they are getting 7% of fixed income dollar rate, and definitely they are raising at 1% or 2% or 3%. So that's a interest rate arbitrage. But we have to develop this market. We need dollar, and we need them to invest in Pakistan, and get the feeling of Pakistan. Once they start getting investing in Pakistan in any instrument, they will ultimately go to equities because the equities returns are much higher than the fixed income returns. So yes, we have, alhamdulillah, we were able to generate the highest number of accounts, over around 50%. And but one thing is that the let's say 70,000 accounts were open, but only around 1,500 to 2,000 accounts open in equities. Okay, so we are around 50% there. But we would like to have more and more accounts open on equities counter as well. And because the returns are awesome, are excellent in the equities market, and even in this year we have good return around 5.5 to 6% from January 1st to date. As far as the other digital onboarding account, yes, SCCP has initiated this, and we, Alhamdulillah, we have in collaboration with National Clearing Company of Pakistan, we have integrated the entire phase, and now anyone who wants to, open an account through Arif Habib, they can just go to the app and they can submit their documents through online, and they can open the account, and the National Clearing Company of Pakistan have integrated with our system, and they will open the account within few hours, the same day, few hours. So they will authenticate the statement digitally, and they will then open the account, online. So it's the way forward. This is the way we can increase our investors base. Our total number of accounts is 250,000. We have to raise the number of account holders in Pakistan Stock Exchange. That's how we can do that.
And you've hit the nail on the head. That 250,000 number it's a surprising number for a country as big as Pakistan, but I'm hoping it's initiatives like this that really accelerate our adoption of equity markets.
And when you talk to me next year, inshallah, we will say that it's a low base effect. The returns will be much higher, the growth will be much higher.
That's amazing. In fact, I was going to say this entire discussion has been a ton of fun. You've shared so many interesting insights. And the piece I was going to say is I do hope we get the opportunity to do something similar in the future. It could be a year after 2021 has passed to sort of recap and see how some of these predictions came true. And then really my final conversation or question rather, as we wrap up, and I want to give you advance notice, this is a question that'll come out of left field, but I'm asking you this. You are the head of a major or leading investment bank in Pakistan. So what you say on this space, I think a lot of people would be interested in listening to. And really my question is, what is your take on Bitcoin and its place in Pakistan's financial system?
I think that it's one should also go in that space, and I think we should quickly look. We have now turned around our digital payment system. We just introduced RAST. State Bank has introduced the concept of RAST. It's a online digital payment, individual to individual, and that's one step forward. Definitely, we have the opportunity of Bitcoin as well, and slowly and gradually we'll move towards that. And definitely, there are many players, there are many investors. The investors will definitely understand the market, understand the system, and they will definitely, there are many market makers who love to trade Bitcoin, and they will definitely do that, because you can see that there is a leverage market, there's a future market. There is the people love to take the risk. They just need to understand the product. They just need to understand the market. So there is potential for Bitcoin market. I think so. And so we need regulation on that count. We need SCCP and Stock Exchange to take, or State Bank to take some regulations on that part. And there are investors who love to take exposure on these kind of asset class.
And this is a step-by-step process, right? First, we talk about tech startups and people getting comfortable with that idea. And then this is something that's really on the frontier when it comes to investments, right? Bitcoin and cryptocurrency. So thank you for those thoughts. I thought those were encouraging thoughts coming from someone like yourself. So thank you for that.